Good morning, everyone. Excuse me. Hope you had a great weekend. Let's see where things are going here. Interesting. Markets always are. The Dow has been moving higher on its own here. And on Friday, we had this, got a pen here, this move here that above this little consolidation, so a little mini breakout, and it closed right at the high of the day. What's interesting about that? Well, when I look at a movement that came from a consolidation, that totally made sense. This kind of price pattern of a breakout and then a sideways consolidation above that, creating a new support area, and then prices begin to move higher from there. Right? That's a predictable, normal type of price action and pattern that leads to higher prices in an uptrend. And then you have these type of bars that don't close at the high, normal. So you got you read that as a little bit of reservation on the way up, which is normal. As prices start to go up, there's some profit taking being taken, and you have here a little topping tail bar. And in a situation like this, a momentum move, you start tracking prior daily bars lows. So this little consolidation here, a little inside day of the prior day, sideways move, and then a breakout above, right? Continuation, and then it closed on the high on a Friday. So traders are confident in higher prices after multiple days up going into a weekend. Is that a little bit too confident? It could be. And so now what we want to do is just continue tracking prior day's lows. So here's our first line in the sand. Right? Does the Dow break below the low of a minor breakout bar that closed on the high of the day? And if it was to do that, there would be a pretty strong shock element to that pattern, which would probably end up in some type of a pullback. And at that point, because it's in an uptrend, can it make a higher low? And where's it going to make a higher low? There's no support reference point. That doesn't mean it can't. There are unfilled gaps here. That might be the reference point where it holds. Maybe, as it comes down, the 20 MA catches up. It's, a commonly followed moving average as a point to take a position. So we'll see. The other scenario could be a blow-off move. So we'll see how the morning shapes up and, of course, what it looks like at the end of the day. So let's see where the futures are at. They're doing here. And they're up a little bit. But the S&Ps are just sideways here. That's where it's been for a couple of weeks. Just chopping sideways, going nowhere. However, within an uptrend. And now you can see the 20 MA is starting to catch up with prices. And historically, that is a point where prices would begin to move higher. It's kind of a little bit of a subjective measurement of saying, hey, the consolidation is gone on long enough where it's reached this moving average. And, let's see, it should get going at this point. It's had enough of a rest after this move to break out and go higher. And so we'll be watching and just, set an alert up here and, let's see if they get going. And they backed off a little bit from resistance, which is normal, but just overall in a trading range there. Looking at the NASDAQ, finally showed a little bit of relative weakness. So a little bit of a downward move, slight compared to the S&Ps, sideways up at the high. Right? So we can measure relative strength quite easily just by looking at the price action. No indicators necessary. Let's go back to them. So the last week or so, I've talked about the extent of this move, and then the next move, and then the current move to suggest that these move close to about what the priors were. This one close to what the priors were. We were due for some type of a correction. So far, that's been sideways. Bullish. It's holding up rather well, creating a new support area. Note the bottoming tails here telling us that buyers are stepping up on dips. So can we go higher from here? Well, we set our alerts at resistance, and we wait to see if it does, and we set alert down here. And, in a sideways chop like that, that's what we do. We set alerts and we wait. We stay away because we don't, we're not going to trade in this type of a mess. The transports have shown a lot of relative weakness. They've come down to the 200 for the second time. But here we have a measured move to the downside. And it came down on a big wide range bar on increasing volume, which historically should set up a lower high. And then either a retest pattern where maybe it bottoms, and say maybe it could bottom even with this type of a correction, because the weekly here is still an uptrend. It made a new high and it's pulled back to a point where it should stabilize, and some sideways consolidation would be appropriate. Now, looking at this in a multiple time frame concept, how do you utilize this? Whereas this time frame has been damaged and this time frame is actually still bullish, and you say buyable. Well, there's a few things going on here. The angle of retracement here, see how it almost went straight down? That's not bullish. However, it is in an uptrend, so we have to take that part of the analysis and say, we've got a big positive, the trend, versus the way this pulled back, and then going to the daily time frame and seeing it's broken through its major support area. It's resting on a subjective reference point, the 200 MA. What would I like to see here to actually think, hey, I would want to buy this based on the weekly time frame? Well, what I would want to see is some repair of this damage. And what does that mean? Some correction through time. In other words, if it came up, it could stop right here, but if it came up a little bit higher and then a retest pattern of this low, maybe a bottoming tail bar, which would be a type of a shakeout, and then as it started to move up in alignment with this weekly time frame, I would find that as an attractive pattern, looking for higher prices and for this daily to come back into alignment with that weekly bullish uptrend. All right. Oil correcting a bit, going sideways, holding up, but weekly downtrend. The depth of the retracement was pretty deep, so it does put this downtrend in question. The fact that it was able to get this far up into here, so we'll see if this holds up here. Can move higher. It's at that resistance, so a little wait and see. And bonds, whipping back down again this morning. A lot of chop going on here in the bond market. And lastly, gold. You got a sell signal last week. Again, the retracement here was rather deep, but we got that reversal after 3 weeks up. And looking for this to continue down, and you can see this rolling top here after a fast drop on the 30-minute chart. Looking for this to break down further. Not that many things moving here pre-market. There are a few things, I suppose, on earnings that are being reported. We've got Mylan down $1, and maybe that's an exhaustion gap since it's already down several days in a row. There's no real support there, but it's pretty not that big of a gap, 3%, but it could be an exhaustion gap. We'll see. What else do we have here? This got an upgrade today, and that's been down a whole bunch, so maybe it begins to stabilize. And another one that was got an upgrade that's been beaten down, could be in play here, is KLAC, down multiple days in a row. So it's flattened out here, which I like. Maybe this can have a bounce. So not of interest from the daily time frame, but it's from the intraday trading point of view. If that upgrade could get some legs under it, maybe we can get a couple of dollar bounce. We'll see with that. Not familiar with this stock, but it's up quite significantly, about 38%, 6.5 points, up into this area. It could be a gap and go. And what else do we have here? They are Another nice gap up here, trading at about 110. So these gaps of, rather significant size gaps, they can go higher. They usually have some legs, but you might want to give them a little bit of time before they get going there. All right, guys, have a great trading week, and we will talk tomorrow.